Sri, hi, good to have you with us. How have you been?
Very good. Been on the road, but glad to be back in Silicon Valley.
Wonderful. Sri, excited to have you here, right? Ever since we spoke, right, and ever since this idea of having you for an interview, came through. I think one thing that I was particularly excited about was the possibility that you've been looking at a lot of emerging markets, right? Especially India, that there seems to be a deep focus in India, and you are identifying those companies which can scale globally, right? Now that's a massive challenge, largely because India has been a market where we've been inward looking largely, right? Our priority has been to cater to the Indian audiences, and Indian audiences offer the complexity, a large market, deep enough, and of course the appetite to purchase. There are ifs and buts there, right? But I think
Yeah,
generally this is a large market to sort of be catered. We've not been an export-focused nation, right? But when you look at countries like Israel, when you look at other emerging countries, they've largely been export-focused. And I think time has come. We've seen that in SaaS and enterprise businesses. But I think time has come for, I think, all sorts of businesses in India to think global, right? To think export first. Because it brings in a certain sense of creativity, it brings in a certain sense of maturity, and I think there's a very different sense of the product play that you build for a global audience, because the maturity of the audience on the other side is much higher, right? And that essentially means that
Mhm.
the rub off automatically on your target market or your home market is going to be so much more better, right? In that sense. Thus, this becomes very important from a conversation standpoint, right? But before
Of
we
course.
do all of that, but before we start talking about RiSo, I'd love you to give us a quick round of introduction and we jump into our conversation around this thesis of taking such companies to global markets and your
Sure. Yeah. No, thank you. Thank you for having me here. I appreciate the opportunity. So I've been based out of Silicon Valley for the last, I would say, 30 some years.
wow.
I have seen pretty much three waves of innovation, everything from internet. I came here before the internet was here, when there was only DARPANET, there was no browsers or anything. After that, we saw the growth of mobile
Right.
when Apple came with the phone. Incidentally, I was not in the Bay Area. I was actually living in Europe at the time. I was in Stockholm, Sweden. And then we saw the emergence of cloud.
Right.
And then now the fourth wave, which is automation and AI,
Right.
and the whole autonomous systems is kind of what we are seeing now.
Right.
So being through all four waves, being a technocrat all my life, being in deep tech, everything from taking the world from 10-100 megabits to 1 gigabit, being in really chips, systems, software, done many of them, ran sales in Europe and back, was in mergers and acquisitions.
Right.
Started getting involved in investments and startup ecosystem, I would say about 5-6 years back, and very deeply involved, actually, to your point, in the Israeli ecosystem, and we can touch upon that later.
Right.
And that's when I realized, like, we got to do something similar for India,
Right.
and that was the thesis for our fund, and that's how we got started in 2019, and we're not stopping here, so we're gonna continue to go.
Fantastic. Sri, I'd love to start with the piece of the fund, right? You've been there, right? You've seen this emergence, you've seen this transition, more importantly, right? And I think
Yeah.
being part of that, this wave and this transition, right? I think that just helps you understand the consumer behavior in a beautiful way, right? And I think that
Correct.
becomes your experience, right? And your ability to assess companies and then also sort of handle these companies when they are sort of say looking to go into markets that they don't necessarily understand, right?
Yeah.
And it's a very challenging environment. I'd love to understand
Yeah.
the pieces and the mechanics beyond that you, for example, bring into this, right, for your portfolio.
Yeah, so no, that's a great point. In fact, as an investor, we have to be one step ahead of the market. We have to be able to see what's coming down. So when we started the fund, I had been involved with Indian startups, Indian companies for a while.
Right.
And for the longest time, after India's independence, for the first, I would say, 2 to 3 decades,
Right.
India was hungry to get technology, hungry to be part of the global market. And the first thing we got was, since everything was public sector in India back in the day, we became an outsourcing country, essentially, software outsourcing country, which was the birth of HCL, Satyam Computers, Infosys, Wipro, all these companies started, which is not a bad thing, because we were coming out of the woods after independence, and we wanted to grab the technology wave. And
Mm-hmm.
we obviously Indians have a tenacity for software, for
Mm-hmm.
science, for mathematics, and so we suck it all in, right? And we became very proficient. We became global. We went outside of India. We settled in different places in the world, and we established ourselves.
Right.
That was the first wave, I call it, right?
Uh-huh.
Then we realized was mobile and cloud came to India just about, I would say, 2000, mid 2000s.
Mm-hmm.
And that's when the whole barrier to starting a company, going to market, and scaling the company became very easy for companies, for
Mm-hmm.
startups.
Right.
And also, second thing is India itself was digitally transforming.
Mm-hmm.
Whether it be businesses, whether it be retail, all markets were digitally transforming. And what ended up happening was a lot of the people who went abroad, they realized like, hey, India is digitally transforming. We got to build product companies. And also within India, they realized that it's a huge internal market.
Right.
So what I call this wave is, India first, global next wave,
Mm-hmm.
which means we are building products at scale. For example, fintech, Paytm, B2C, digital, mobile, banking, fintech. It's explosive growth. And the second thing is India had the opportunity to leapfrog some of the advanced economies because we don't have any legacy systems in place down into, so we could do whatever we want. It was a free for all. So India sucked everything off. We took all the technologies that were coming from Silicon Valley, from other places, and we said we're going to build the digital India, which is where we are, which is products, startups, India first, and then they're realizing, hey, we're building products at scale, we can go global. And so you're seeing a lot of the companies in India now taking those products and going global because the economies of scales are there, the business model exists. Where I think as investors, we invested in that second wave. Essentially, when we started RiSo Capital, we were a little bit late, I would say. I think the transition started somewhere in the mid 2000s. We realized a gap in the Indian market in terms of investments. So there was angel investments, and then there were late stage investments. I would say Bloom Ventures, I have to give them credit because they were one of the first who came in India and said, hey, we got to fill this seed pre-Series A hole. And to start investing in that stage. So I think they did a fantastic job to create that ecosystem. And what we said was, hey, we're going to bring the technology prowess from Silicon Valley, put on the Silicon Valley hat, and come back to India and say, which are the companies, we are very good at identifying technologies. We know deep tech, and we know which companies can scale because we've been operational in several companies. Mm-hmm. And so when we came to India, it was very easy for us to pick the right entrepreneurs, right companies that are scaling way before they're actually at scale. And so I would say we've done reasonably well so far in our first fund. And we are going into our next wave, I would say in India, but then I'm getting ahead of myself. So I'll just stop there for a second.
And I will come back to that. In just a bit, right? But before I do that, right? I mean, I honestly wanted to jump into, discussing the global challenges, right? That come in, when you're looking to scale, a company, right? But before I do that, I would love to understand a little more about the portfolio tree. If you could take us through the portfolio that you have, I think it would be great.
So from a thesis perspective, what we said was, we come from Silicon Valley. So we said, look, doing deep tech is extremely hard to disrupt fundamentally. Mm-hmm. But what we realized is that what India is good at doing is to adopt technology and disrupt business models.
Right.
So we when we went into India, we said we're going to invest in companies that are not necessarily deep tech or disrupting technologies, but they're using deep tech to disrupt business models. Right. So we said, and we also said that from a risk perspective, we are not going to invest in B2C. We are going to primarily invest in B2B companies because we felt that B2C, you have either big gains or big losses, and we didn't want to be in that stretch. Right. So we said we're gonna be very even keeled in terms of investments, and we're gonna invest in B2B companies. Right. And we said we looked at the top, I would say, growing sectors within India where disruption was needed from a business model perspective, and we looked at fintech. Sure. We looked at logistics. Mm-hmm. We looked at EV. Actually, we'll touch upon that later. I think clean tech, we said, look, India is extremely massively polluted, and we said electric vehicle needs to be there, and we invested in two fantastic companies as a part of that investment thesis.
Right.
We invested in health tech, even though we didn't have too much experience in health tech, I must say. We did make an investment from in a telepathology company, which we are really happy about. So in a sense, we invest in enterprise companies that are automating processes in enterprise, logistics, clean tech, fintech. So that's kind of our thesis in the sort of the first fund.
Interesting. Now, Sri, this is an interesting point that you highlighted, right? I'm gonna push the challenge question a little further. But when you talk about B2B, right? Now the biggest of all problems is that when you talk about enterprise SaaS, when you talk about AI, when you talk about tech, right? A lot of these companies have largely looked at export markets, and that's largely because your factory costs are much lesser, your cost of manufacturing is much lesser, and you have a market which is, and the arbitrage becomes very interesting, right? Across the two markets, right? But when you start looking at, say, a market like India, right? So when you're looking at, say, coexistence, right? In a global market scenario, say, and largely US, because that's the highest paying in and the fastest in terms of adoption. And when you start looking at a market like India, right, which is massive opportunity, a lot of SMEs, MSMEs, right, a B2B environment that we kind of talked about, right? And my sense is as a founder, you have to really sort of focus on this, right? Because you're looking at scale, adoption, all of that, right? For your next round, validation of what you're doing, so on and so forth, right? Now the challenge is that in a developing market like India, right, cost of technology is considered, it's hugely different, right? There's this. But that's largely because it's a promoter-driven business. There are archaic ways and traditional ways of doing businesses. Adoption becomes a huge challenge because people need to be brought into a certain skill level. All of that happens, right? It's easier said than done. That's number one. Number two, also your ability to price a product is very, very limited, right? Usually in a B2B environment, cost of transaction, but everybody who is owning a business or running a business wants to kill that cost of from a supply side, right? And defer that as much as possible, right? And that leads to delinquencies as well in the process. That's not really the case with SaaS businesses, but usually when you start to look at certain other businesses, that also goes back in the process. No sense of it. My sense is that, while they could be safer bets, they offer a very limited upside when it comes to your ability to price it. And usually there is somebody else also in the market which catches on, right? It's a very, very... What's your sense about it?
No, it's a great point that you raised, and we also question when people say I want to monetize data. It's extremely hard to do that in India because people are not willing to pay for data. They're not used to paying for data and analytics. So what we ended up doing, like I mentioned, is investing in companies that are disrupting the business models. In a sense, what we're doing is if there were, let's say, 3 or 4 steps in a process, then they're collapsing it into one step. Or if there's, let's say, 3 or 4 players in the value chain, then they're collapsing the value chain into one vendor or maybe 2 vendors instead of 6 vendors. So in a sense, you're creating value for both the end points on the value chain. So that way you're extracting value to say, hey, you don't have to work with 5 different vendors. You can just work with me. That way you're creating true value, which is what we mean by business model transformation.
Interesting.
Okay. We are not going into businesses where the existing processes exist and they're just optimizing maybe for efficiencies. We are not investing in those companies. We're investing in companies that are fundamentally reducing the layers on the value chain. They're basically reducing the number of steps involved in a process substantially for them to be able to extract that value out of the customer base, right?
Interesting.
So that's kind of how. I'll give you an example. Freightify we invested in. Freightify we invested in. They are automating using a SaaS layer 100-year-old freight marine shipment industry. Indian ports have been using paper, pen, emails, phone, faxes type discussion to get pricing for freight. Every time a freight forwarder ships something, they have to go through manual processes, maybe 10, 20 processes. Freightify, ex-DHL guys, ex-HCL guys, they started the company very early stage. We went in, we met with Raghav and he said, look, we are going to disrupt a 100-year-old industry and we're going to take it global because what we're doing in India is going to be applicable everywhere in the world, because even everywhere in the world, believe it or not, things are still very manual.
Right.
And so what they did was they automated. Within a click of a button, you can get from point A to point B, shipment, pricing, and all of that. So that brought a lot of value. Hence, now they're scaling globally. They have a tie with Myers. They're going to US. They're going to Europe. So they're really scaling globally, starting from India. So that
very interesting. Sri, on that point, right? On that case study, right? A quick question, right? But a very important question, right? Now, when you talk about B2B, right, or any of these, layers and opportunities that exist within the B2B framework, right? How important does the team become? To me, at a distance, I think that's the real defining factor, right? The experience of a founder really becomes so much more critical, right? Because, those connectivities, those inroads, those nuances, how you deal with, say, bureaucracy for that matter, right? Within organizations, within government and policy-making institutions, just becomes so much more important, right? I'd love to hear from you. When you're looking at such opportunities, right, how critical does it become that the relevant experience is there with the teams to crack these?
It's a big part of our thesis in investment. Actually, I would say as much as 70% of our thesis is based on the team.
Okay.
In fact, we have a very detailed spreadsheet where we analyze right from the time when we first do the pitch with the company. We analyze whether the team is relevant background, whether the founder has a vision to take the company. We typically, on the first pitch, for the sake of it, we ask them, hey, where do you want to take the company 10 years from now? We just push it. I want to see the reaction from the founder. Is he saying, I'm going to take it IPO, which tells me that he has conviction. Whether he's going to really do it or not, different question. But if he says, I'm going to take the company IPO, then he has what it takes at least to have the convictions to say, I'm going to take the company and I'm going to scale it massively, right? The second thing we look at is not just the founder. Before we actually finish the investment, we have a call with all the founders on a call together, and we see how they interact with each other, and also if they've worked together in the past, ideally, because we want to see if they have sort of team formation already done before they started the company, or are they just forming now? Because if you're in a startup and you're just forming a team and you're having dysfunctions in the team, you're going to be dead in the water within 12 to 24 months, right? And so because at the early stage that we invested in, it's all about execution, and it's all about the teamwork. That's what it comes down to, and whether they have relevant background and expertise in the area that they're in. So some of the questions we ask is, hey, do you have experience in this field? How long have you been in this field? Why are you passionate about what you're doing? Why did you pick your founders the way you did? And we poke holes in their team to say, hey, is there anybody that you would rather hire before the next round? So we try to find out if they're very conscious about what kind of team they have, what the holes they have, and come up front and very clean with us, so that then we can really work with them and say, hey, here are the real holes. You don't have a good finance guy, or you don't have a good go-to-market guy. You need to hire somebody at the co-founder level and then go from there. So that's the level of discussion. So 70% of our thesis, I would say, is based on founders and background and how good they are.
I think somebody classically said, right? I think the team is the only constant when you're building a business, especially when it's 0 to 10, right?
I think absolutely. And by the way, the only reason why we also do this is because you start with an idea, but you may not end with that same idea 2 years, 3 years from now. You are going through several pivots. The only thing that remains constant is the team that's working on it, right? And they have to have the grit and the perseverance to go through that. And that's what we want to see in founders, to say, hey, if you have headwinds, can you actually face that, and are you able to go through it or not? And that's a very important characteristic for us.
Super. Sri, there's another, last 2.5 years, the event that we've seen, that of COVID-19, right? I think it's been I think none of us fathom ever in our lifetimes, right, that we're going to come across an event like this, right? And this is an event, while it's been a massive disruption, right? I think it's also brought in a very different kind of a challenge. And when you talk about global markets, right, I think the complexity even increases further. So while the constant is that, people want to adopt to technology, the functionality within organizations is sort of shifted, right? The decision making is kind of tweaked, right? Priorities have kind of changed. the biggest of all risks in a business environment is that the consumer mindset is going through a massive shift and change, right? Essentially, that the requirement of, say, B2B plugins, enterprise elements is going to be very, very different over a period of time, right? Now, this is something which has brought a very different kind of challenge. When you talk of the team that you do, right? And these are teams that, I'm assuming that, you're looking at least a couple of years operating experience. They were essentially tuned for a slightly older world system, a system that had many crevices, that had dichotomies, discrepancies, right? And business model was essentially adjusted to it, right? We've moved into a very, very connected ecosystem, very, very fast ecosystem, very agile ecosystem, right? How do you see these challenges when you are evaluating the team and your role, for example, as an investor? Because I think investors' role as that anchor at a distance who can, help them navigate better, guide them better, becomes very critical. You come with a lot of operational experience. How is that equation playing out, Dr.?
Yeah, no, that's an insightful question. I think what we try to do, to going back to our thesis, is to find out the markets that are actually ripe for disruption.
Sure.
Things that have been the same way for a long time, and they're not going to go through an evolution, but they're actually going to go through a disruption.
Right.
Two different things. So evolution is where you actually face the challenges of existing systems, current systems, and then future systems, and it's all a gray area where all the systems are mixed together. It's extremely complicated to transition from one to the other. We typically get into investments that are actually disrupting, which means it's going from 0 to a 1 or 1 to a 0, and it's a complete transformation. And so in those cases, we are typically looking at value chains collapsing, and founders being able to really, with their energy, with the conviction, being able to transform those markets using technology as the basis, right? I'll give you an example of even SupplyNote. We invested in SupplyNote. And actually even Zip Electric, we invested in Zip Electric. Both the founders, I must say, Akash, for example, he has conviction that he's going to bring in electric vehicles to the logistics market, and that's a disruption because it has never been done in India. I mean, he was one of the first companies in India to actually bring EV two-wheelers for logistics, and now he's completely disrupted the market, and he's now taking it by the helm, and he's going it. Versus having, let's say a gradually transitioning market from, let's say, gas to LPG and then to EV or to some other market, then you see a gradual transformation, which it gets complicated. And so from our standpoint, we actually don't see gray, we see black and white, wherein in reality, it's not black and white. It's probably more white and then more black, some cases. And usually the transition takes maybe 3 to 4 years, which is exactly the time frame that we stay in an investment. Our fund term is 7 years. We try to invest and get out within those 7 years, usually. And so that's the time period for the transition for that market that we're targeting. Right?
Interesting. Sri, I think no conversation can be complete without asking, what are the emerging areas, right? And I think that which just becomes so much more interesting, right? When I'm talking to any investor, right? Because it's fun to be understanding how somebody sees the future come through, right? I would love to see that. You're at a vantage point, right? You're looking at many changes, many shifts, right? You're closest to seeing certain consumer trends emerge, right? In the process as you're evaluating a lot of these companies. What are some of from some of the emerging areas that you're looking at? You've highlighted a couple of them, right? EV seems to be something which is very close to your heart. You're kind of backing it with Zip. Akash is a great guy, I think a very determined founder, right? Who's trying to sort of change with all those challenges that exist. I think he's trying to change the market. Clean tech again seems to be a great area which you've highlighted for the conversation. But what are some of these pieces that you're looking at, right? What are some of the micro opportunities that you can identify? It'll be interesting to understand.
Yeah. So I call this the third wave of transformation. We talked about the first wave of transformation for India, which is software outsourcing. Right. And we talked about India first, global next, which was the second wave of transformation. I strongly believe in the next 20 years, India is geopolitically well positioned to be global first, which means that there will be companies that are addressing global problems from day one. And I think that the problems in front of us, which are at massive scale, is not Web 3.0, it's not EV, it's clean energy, it's clean tech, it's sustainability. You talk to any investor these days, any forum you go to, any corporate board that you talk to, the first thing they're getting asked is, okay, how are you getting to carbon neutral? How are you addressing decarbonization? How are you addressing these things? And what's going to drive that? Two things. I always give this analogy. When iPhone first started, the whole internet crashed because the network was not built to support data. It was all voice before that. It was Nokia phones that used to support only voice. When iPhone came, it transformed the way we do business, the way we connect, the way we socialize. And that just transformed. It's even now, if you saw Apple's announcement, they're transforming the entire fintech market, right? With BNPL announcement. If you saw the announcement yesterday. So what I foresee is the convergence of EV and Web 3.0 is going to be a massive, massive demand on electricity, on energy, on various aspects of these things, and that's going to cause a lot of supply-demand mismatch, wherein you're going to have 4x demand of what can be supplied by the grids.
Interesting.
And that's going to be in the face of carbon neutrality that India needs to achieve in the next 20 to 30 years. Now, the reason why it's important is because of what's happening with energy crisis in Europe, what's happening with Russia, and India is, I believe, uniquely positioned, especially with the amount of money that Adani, Reliance, Tata Power are pouring into energy. I believe that there's going to be a solid ecosystem of not just high capex, traditional clean tech, clean energy companies, but software, blockchain, AI, automation-based companies that are going to disrupt traditional businesses like energy, like mobility, like electrification. Now, within that micro themes, if you ask me, yes, crypto is going to be huge. That's part of Web 3.0. Blockchain is going to be huge because that's going to fundamentally disrupt the way web computing is done, because it's going to be completely distributed. Edge computing, it's going to be very differently done. It's going to be meta, it's going to be metaverse, and India is going to play a huge role in all of those things. But fundamentally, strategically positioned, India is going to be in energy, it's going to be in how we solve energy crisis, and India is going to be very strategically placed, I believe, in the next 20 to 30 years.
Super. Three slightly important question, right? Now, going back to COVID again, right? Now that is brought in a very different kind of system, right? These are great areas that you've spoken about, right? But from a consumer's landscape, I think there's a fundamental shift which is happening, right? So, for example, today hybrid culture is kind of taking over. Organizations become so much more serious, right? So, there's like a systemic shift which is happening, which brings us closer to sustainable practices, right? While these conversations are pertinent, right? I think a lot of this transition has happened effortlessly, right? And it's also made a lot of financial sort of a sense, right? Now, when you are looking at companies going forward, what are some of these systemic risks that you're looking at, right? I know it's a very difficult one. I know it's very difficult to predict, the dynamics of the environment are such that you really can't do it, right? But I think this last 2.5 years has opened up us to certain behavioral tendencies of how policymakers are going to actually react to it, right? It's become so much more important from business practices standpoint, right? What are some of those nuances that you will look at going forward in the portfolio companies that you have in that sense, right? Which could, in an event like the one we saw, an aberration, it could affect that business from 1 to 0, like you said, right? What would be some of those elements that you continue to?
So I think fundamentally we want to invest in companies that are looking at businesses and making businesses profitable and sustainable businesses, rather than just climbing the valuation ladder, right? I always tell all my portfolio companies, work hard on building a good business, investors will come. No problem. But if you're working towards investors, then business is not going to come back. So the vice versa is not true. If you work towards a business, then investors will come. But if you're working towards investors, the business does not come because you're not adding value to your customers.
Right.
So I think that's an important point that we are going to we iterate, and we sent a message. In fact, I sent a note to all my, even before the Y Combinator note came out, even before any of the Sequoia notes came out, we sent a note to all of our portfolio companies early in Q1 that try to build a business that you can keep the runway for the next 24 months. Right. Build sustainable businesses, build real businesses, not on froth, not on valuation, and not on the hype curve.
And not fringe.
Not on fringe, not on hype. Real businesses, real customers, slightly extended, I would say, themes, slightly fringe is okay, because otherwise you're not innovating. So we believe that you have to innovate, but at the same time, you cannot be at the hype curve. Hype curve is important, but then that's where the traditional, very deep tech companies occur, in the hype curve. And India is, I believe, even though some people may disagree, I still believe that India is still not fully set up to do fundamental deep tech. I think it will happen, but it's going to take a lot more ecosystem to be built up in India before fundamental disruptive companies can start in India.
I agree with you. I agree with you on that, Sri. Sri, towards the end of our conversation, right? Now I'd love to understand that you're in the valley, you're looking at European markets, you're working very closely with Israel. What are the emerging areas, right? For example, Indonesia is something which has come up phenomenally well, right? Within Asia, it gives you pretty much all of flavor, right? With 400 million people, homogeneity, right? It's become an exciting market, right? What are some of the other emerging areas that you've been looking at that have, sprung out, and how? What do you understand?
So the whole, so I'll start several sectors. I'll try to touch upon from a retail interactivity perspective. I believe live video shopping, live video has a ways to go. I think it's going to continue to grow. The TikTok wave is still not done yet. I think TikTok was an app, but I think the impact of TikTok on other businesses and how we do business and how new generations consume products and look at products. I think there's a ways to go. We invested in a company called Buzz. They're a live video shopping company. They're growing amazingly in India. So I think that's going to be a huge market in India. The second one within fintech market, I think lending is going to be a very strong space because if a lot of banks are sitting on a lot of cash and they want to be able to lend in these times. In fact, lending is extremely important these times when you're not getting equity credits from investors. You have to go to debt markets or you have to go to loan. And so lending is becoming extremely solid, but then how do you de-risk some of these lending instruments? And how do you quantify and use AI, ML to actually quantify the risk? I think that's a huge market. I believe fintech and insurance are two areas that are fundamentally waiting to be disrupted. Apple's announcement just shows the tip of the iceberg. I'm pretty sure Microsoft, Apple, and other big companies are going to disrupt the banking ecosystem as we know it. I think blockchain fundamentally is also going to be disruptive to a lot of the markets. And I think Asia in general, Southeast Asia, I think is going to be in general still continuing to grow at a pretty healthy rate. I look for Indian portfolio companies to grow within Middle East and Southeast Asia, and that itself gives them a very good breeding ground, so to speak, right? So we see that as a good markets for us to enter and invest in.
I think GCC has become very, very exciting of late, right? I think they've been able to capture this entire shift in crypto, which I think Southeast Asia in a way kind of missed out on. But
the other trend we are also seeing is that European investors, US investors, Japanese investors are now moving more and more to Asia. If you see the latest trend, if you look at the venture capital money going outside of US, India is right now the second recipient after after Canada, after United Kingdom, to get the most amount of venture capital from US, for example. Japan is now investing heavily, starting to invest in India and also Southeast Asia. So these sort of developed economies are realizing that the growth is actually happening in Southeast Asia. So they're actually moving capital, they're tapping into innovation. And in general, they are able to leapfrog. And so whatever technologies come, they're able to capitalize on a global scale, right? So,
Sri, one interesting trend that, at least, because being in media, right, I think you get access into a lot of things, right? You get to talk to a lot of stakeholders. I think one interesting trend that we've been seeing, right, is that a lot of global founders are now looking at India operations, right, or setting up for India and prioritizing India, right? Something that was unheard of, right? Typically, you would see everybody essentially concentrated towards the US, right? But I think this is a great shift, right? And I think this concoction of bringing in that global expertise and this capital now as a focus, I think it's going to be great for India to, for the aspirations that we have as a country, right?
Absolutely. I think that trend is going to continue for decades to come. Yes.
Super. Sri, last question in this conversation, right? Slightly cliched, but I like to register it, right? As a parting sort of a comment, right? I'd love you to, give out any suggestion. Like I said, right? You've been in this ecosystem for a long time, right? You've seen a lot of this transition. You've seen, you've been in a unique position to see founders, right? Maturity of founders becomes just so much more important. Any suggestion, any advice that you would want to give out to founders? Times ahead are very, very challenging. Right? We're in uncharted territories completely, right? I think data is going to be our only sort of a guidance, right? And institutionalized learning, for example, is going to be so much more important in the process. Any advice, any suggestion that you would want to give to founders? I'd love you to, that to be the ending sort of a comment and note.
Okay. I think I have had the unique opportunity to work with very good founders. So they, luckily for them, I don't have to give them any guidance. But nevertheless, since you asked, I think the things I typically tell founders is, don't let people tell you cannot do anything. If you have the conviction, go and do it and prove it to yourself that you can do it. If you can't, then you prove it to yourself that you can't do it, and then you back off, right?
Right.
So I think having conviction and following through your conviction and executing to your plan is primary. It's a primary skill for the entrepreneur to have in the face of especially adversity, in the face of bad factors going against your wishes. I think the second thing is focus on your customers always. 200%, 300% focus on your customers and execute. At least in early stage companies, if you're an early stage entrepreneur, it all comes down to execution. You may execute it wrongly, but it doesn't help if you don't have a product. So you have to have a product or a service out to the customer and have them validated. If it doesn't work, come back to the drawing board, change it, execute, go back to the customer. You have to do that loop endlessly till you get it right. And have a paying customer at the end of it, and that you repeat it 1,000 times and you have a unicorn. So it's a very simple math, and I think surround yourself with people who can challenge you. I think that's the third thing I would say is about team. When you build a team, I think always throw your ego out of the window. I've seen a lot of founders who think they know everything. I sometimes end up doing that, by the way. I'm not, sometimes I think I know certain things when I actually don't. So what I end up doing is I surround myself with people who correct me and I learn from them. And I think it's extremely important from people to learn from your peers. Otherwise you will not be proceeding forward and progressing. So I think those three are extremely important, other than the other things like running a business and all of that. But I think these are 4 tenets that I look for every entrepreneur and every founder to have to build a company.
I think that the common constant across all the 3 points that you highlighted, right, is being humble. And I think just staying focused, right? I think going through that process again.
Yeah.
Not possible without being humble, right? Not possible without being
absolutely.
And
there's always something you can learn from somebody. There's always something.
Absolutely. Sri, thank you so much for this conversation. It was an absolutely spectacular conversation. I think great conversations are always unfinished, right? And I look forward for another opportunity to have you with us. We've been able to cover the larger macros, but I'd love to, deep down around some very specific operating aspects, right? In our next conversation, yeah. I've saved some of the questions for myself. Look forward to having you with us much sooner. Thank you once again. It was a pleasure to have you with us.
Absolutely, Ashu. Thank you so much, and I look forward to speaking with you again.
Look forward. Thank you.
Have a good one. Take care.